Well, Pradeep, it's really nice to see you again. Gosh, I think the last time I saw you, probably in person in Singapore at one of our conferences. Trust you're keeping well.
Absolutely, Rodney. Thanks for having me over. It's been probably a couple of years since we met, but it's nice to sort of catch up virtually. So many thanks for having me over.
Now, in the time since we were talking face to face, a lot's been going on in the Indian economy. Give me a little of your perspective of those macroeconomic facts.
Sure, Rodney. So the Indian economy is set for a very interesting ride this decade. As per the government estimates, India's GDP will grow at 9.2% in financial year 21-22. This is as against a contraction of 7.2% since last year. And this growth of 9.2% would probably be the highest India has achieved in the last 17 years, although this is at a much lower base. What we're seeing is agricultural sector and manufacturing sector are set for an uptake. They're going to be the main contributories to the Indian economy. Manufacturing sector is likely to grow by 12.5%. That's very significant. I mean, we've seen growth spurts of about 4 or 5%, but 12.5% is very, very significant from an Indian perspective. The monsoons have been good, so the agricultural sector is also likely to grow by about 4%. A couple of areas of concern, and I think this is a case of concern across economies, across countries. A is on inflation. I think India is seeing a high inflationary trend, and the government will need to do something to sort of arrest this going forward. The second, concern that I see is whether India will look at a stimulus in the coming years, or whether it will start tightening the fiscal deficit, because there is always this concern of spending a lot without recouping it in the short run. So I would probably say these are two areas of concern. Having said that, I think India is set for a reasonably good growth in the next 2 years. I think it's the GDP is likely to grow by around 8.5% next year and 7% in the following years. So I think in that sense, India is ready to unleash its full economic potential in the current decade. If I'm looking at the tax environment, I think the government has undertaken periodical tax measures to make the tax policy, investor friendly, especially with foreign investors. Because, the earlier part of last decade, we had a lot of regressive tax reforms, and that didn't gel well with the foreign investors, be it the indirect transfer provision that was brought in or retroactive taxation of royalties, etc. But the government has been able to sort of navigate through that in a very positive manner. So, for example, all the past tax proceedings on recovery of taxes on indirect transfers have been sort of aborted, at least with respect to proceedings relating to the period prior to the introduction of law. So you're not going to see anything that's going to get recovered from a Vodafone, from Kane, etc., which is a very, very positive sign in that sense. The government has also, committed to not bring in any retroactive tax provisions. So even though there have been some provisions which have been brought in the recent past, those things have been clarificatory in nature and again not regressive in nature. There have also been amnesty schemes that the government has brought in the recent past. So all in all, I think it's a fairly good direction that the government is embarking on. This whole alignment with what's happening from a BEPS Pillar 1, Pillar 2 perspective, where although India is not an OECD member, has sort of somewhere taken a confirmatory stand on these proposals as they sort of unleash itself in the future. So I think all in all, it's a good direction that the Indian tax environment is progressing. And with the economy doing well, I think we're set for a very good ride.
That's really interesting. I mean, it sounds like a really good framework for ongoing growth. And Pradeep, you mentioned the manufacturing sector. So let me just ask a little bit about that. Give me your perspective on any sort of fiscal or tax incentives that are really focused in on that sector.
Sure, Rodney. So, like I said, I think the Indian manufacturing sector is poised for a stupendous growth. Although this might be in the backbone of a couple of years of contraction, but what we're seeing is there is a lot of investment coming in the manufacturing sector. The China plus one strategy of a lot of multinationals is also helping the cause of the Indian manufacturing sector. And another factor would probably be the surge in domestic demand, which is also commensurate to the purchasing power, which has sort of increased progressively for Indian consumers. Now, in light of this, what the government had done was they brought in reforms, right, to aid the manufacturing sector and to somewhere, make India as a hub for manufacturing activities. So this started off with reducing the corporate tax rates for all companies. The headline corporate tax rates got reduced from 30 to 22%. And for new manufacturing companies, there was a incentivized tax rate that was brought in, where these companies were subject to a very low tax rate of 15%. So for example, if there is someone who's going to set up a new company under which manufacturing operations are housed, then the rate at which those profits would be taxed would be at 15%, including surcharges and education cess, it'll probably be at 17%. So that's a very, very competitive rate. And again, this also somewhere aligns to what your global minimum tax rate is under proposals. So I don't know whether the government sort of envisaged this in advance, but interestingly, it coincides with what you see in the Pillar 2 proposals. But this comes with certain riders. So one such rider is that there are certain anti-abuse and safe harbor provisions. So you can't just move a manufacturing activity from company A to company B and seek to derive this reduced tax rate. You need to satisfy these anti-abuse and safe harbor provisions. So the intention is to confer this lower tax rate to increasing capacity and increasing potentially employment, in the Indian economy. But again, that is somewhere progressive, because India is, or the Indian government is recognizing that capacity building is the way forward for the future. In addition to the tax incentives, there are also a number of fiscal incentives which the government has come up with. We call this the PLI schemes, where the incentive is linked to incremental production achieved or incremental sales which is achieved. And this is also pegged to a level of capital investment. And these are in the nature of cash subsidies. So this is something which the government has allocated as part of its budgetary allocation for various sectors, ranging from auto to steel to pharma, etc. And basis the thresholds and the conditions which the manufacturers satisfy, these fiscal incentives are provided. So I think it's a two-pronged approach that the government has adopted, where they've tried to sort of marry the tax incentives with fiscal incentives and to somewhere, make manufacturing story come back to India. I mean, India was known for this a few decades back. It sort of somewhere, nosedived in the early part of 2000, where the focus was more on the services industry. But I think with these incentives, probably the sheen for the manufacturing sector would come back.
So Pradeep, that's really interesting. I mean, you paint a backdrop of a fast-growing, vibrant economy and budgetary messages to support that, and then some really good insights there about the fact that manufacturing continues to be a focus and supported by the government. And there are these incentives that are both cash and tax. And so really worth focusing in on those to see if they're accessible by people that are looking to expand their footprint in India. So that's a really nice, positive message for the manufacturing sector, Pradeep. And look, thank you for your insights today. And I look forward to, seeing you in person next time we're traveling.
Absolutely, Rodney. Thanks for having me over, and I was glad that I could share some insights from an Indian perspective. Thank you.